Well, ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor at large at The Block, and I'm very excited to have Alok Vasudev back on the show from Standard Crypto. It feels like we're back, as we were talking before we turned on the mics. You feel like you're back at the tail end of 2019, but it really hasn't translated into deal flow probably yet. How do you feel about the market right now?
Deal flow is a funny thing in bear markets. I think that the velocity is down as it should be, but I think the quality that you get is so much better. I'm sure you've seen this too with in terms of like what you get pitched on at the block, right? It's that people who are here are in it to win it, and they're not in it because they heard it was cool or they're hype chasing. And so that's been the case. We've been doing a bunch of deals. We've been having fun. We've been busy, but it's almost refreshing because you just have so many less frogs to kiss, so to speak.
Yeah, and you're getting second-time crypto founders as well, or at least like people who've been in the space in a while, kind of on their second, and in some cases third act, which is interesting to see.
Big time. So many of the best founders and be it blockchains, protocols, companies, it's rare that their first at bat in crypto ever is what actually is the thing that they do that's the most impressive. Usually they skin their knees on someone else's dime. They're in the space for a while, and then by the time they're ready, they've done a good job of just acclimating themselves. Right? You know this better than anyone. I think that there's the aspect of crypto where it's a vibe as much as it is a set of technologies, as much as it is kind of financial concepts. And so being able to understand the space in this very firsthand intuitive way is really important when it comes to thinking about the right product to build, when it comes to thinking about the right go-to-market plan to employ. So it's the folks that are around for a while. That's why there's such an advantage.
What do you think? What do you think is behind this shift? Is it just a vibe change? Is it as simple as the vibe is now different, or is there actual technical progress developments that are underpinning this shift? I think a large component of it is just Mr. Larry Fink changing his tune on Bitcoin and crypto. He's, interestingly enough, not just a Bitcoin. He's not the blockchain, not crypto type of person, it seems, anymore. But he's also not just like a Bitcoin gold bug type as well. He seems to see value across the space, and I think that's. I mean, if you just look at any of the charts, right? June 15th, the day of that filing, was massive and sort of maybe finally pushing us a little out of the wake of FTX melting down. And so I think that's the catalyst, but are there other elements at play?
I think you're spot on. I think it's a huge deal. I think in November, December, I think the market probably was oversold at that point. And the plot that we can never lose, right, is that this stuff is on the right side of history, and ultimately everything, be it from money that's out of the grip of a sovereign to application platforms that are neutral, these are on the right side of history. And so it's just a matter of people navigating through what they're looking for in order to get excited about it or adopt it, and where they are on that kind of crossing the chasm curve. And so oversold in December, November, December, end of last year. And then part of it was just kind of recovery to where probably a better equilibrium to where the space should be based on the amount of progress that's been made, right? If you just compare the space compared to this time in the previous cycle, right, we have progressed leaps and bounds, right? It used to be that we were kind of really wringing our hands around, will these things even scale a little bit? And we're worried about Ethereum having its entire block space strangled by CryptoKitties, and all of it was, do we have enough block space? Can we do enough? And then you look at where we are now. We have a half a dozen or so rollups. We have a bunch of blockchains that have that are exploring totally different design properties, and we have an abundance of block space. Right. In fact, now we don't have enough good use cases for the amount of block space that we have out there for people to use. And so on a fundamentals basis, we've progressed so materially. And so to some degree, there should be a reflection of that in where the equilibrium prices for these assets sit. And we are below that in kind of the height of the fear of FTX and some of the regulatory news. And then we kind of reached an equilibrium. And now that we're at an equilibrium, it's about what are establishing new baselines for future equilibriums. And the ETF stuff has always been like a will they, won't they thing forever, right? And we'll see. We're not done. There still needs to be a formal approval, but I think what you're seeing is certainly a different character of types that are in the mix here. And this is institutional adoption has always been this kind of meme, this meta that's there. But this looks like the start of it happening in a way that it hasn't before. And so everyone's eventually going to own Bitcoin. It's just going to, they're just going to need to pick their spots and figure out who they're going to buy it from or how they're going to do it and how they're going to use it. And it'll just take time and come somewhat unevenly. But this has been cool.
What do you think the biggest alpha is right now in this market?
The biggest alpha. So again, we were talking before the show. I really believe that if you look at every crypto cycle, there is a brand new advancement of what you can do on a blockchain that really solidifies that bull. I think there are some things that are like, for example, Bitcoin is there every single time. There are some things that are old, but it's often paired with something that really expands people's minds and abilities with blockchains. And so in 2013, the 2013, that was really a Bitcoin-centric bull run. And then in 2017, really it was the first, it was a bull run that had tokens and ICOs. And it was the first time that we were actually using a blockchain for crowdfunding. We were actually starting to really think about the application layer. And then in 2021, we actually it was the first application layer led bull, right? Because we had DeFi protocols, we had NFT kind of DeFi on the front, we had NFTs in the back. And also what we measured was different, right? DeFi was, we were measuring product metrics like TVL and transaction volume. And for NFTs, we were measuring users and things like that. Whereas in 17, we were just talking about white papers and token tables. That's kind of all we had, or maybe transaction counts if you were looking at blockchains compared to one and another. And so I think the alpha to your original question is what are going to be that set of advancements in what blockchains are used for that really help define the next cycle in conjunction with Bitcoin and some of the other baseline things that we have occur every time. And my guess, and where we've invested behind, so it's more than just an empty guess, is I think it's a really cool time for applications. And I think often that we're no longer as infrastructure constrained as I think people want to feel like we are. I feel like there's this kind of perpetual, we are infrastructure constrained mentality within crypto. And I think that, yes, like we need to keep beefing up our infrastructure. We need to keep improving it. No doubt. We need to expand the capabilities of what blockchains can do. But at some point, it looks like a retreat to infrastructure because there's often like a lack of courage to go and call your shot on what are going to be the applications that actually utilize these blockchains.
That's a really interesting point. Like it's almost like there's almost room for more consolidation at that infrastructure level. What do you think? What do you think is the largest impediment that has prevented like a Cambrian explosion of sorts on the application layer. What's missing, right? Because we can talk until we're blue in the face about the benefits, but is it maybe, like, I'm thinking, we talk with Lens a lot because we've been moving into um, expanding our presence across different social channels for the podcast, but also for the company. Um, and so, for them, it's kind of like, how do you tell that story? Is it these apps maybe aren't reaching enough consumers because they aren't necessarily like honing in on that story of the app, or is it something else? Like, what are your thoughts there? Because it's totally accurate, but
Yeah, as a whole, um, I don't think so. There's like, what do we need in order to make this appealing to the masses? What do we need in order to make this happen? I don't know if those are tech solves necessarily. I actually think that we may have enough, and it's just a matter of timing and getting the product right. And that's not to say that we are, you should be thinking about, right. Threads had what, like 100 million users in its first like 48 hours. I think that scale is unattainable for a crypto app. We don't have that many users to even go after. And so we have a scale that's pretty interesting right now. And I think in terms of like, why hasn't it happened yet? I think number one, we reached that kind of interesting level of scale not so long ago, right? When I think about what are some of the important attributes that you need in the water for more consumer applications to work, you need enough people with wallets, first of all, and not just like right. People have measured crypto wallets over time, but I think prior to basically like a year and a half ago, most people's crypto wallets was they would just hold assets in it in cold storage, or they would do it in long term custody, and a wallet was more like a bank account. But now we use, with really, I think MetaMask, browser wallets, like using wallets actively. Wallets as daily drivers, where you actually are a DAU of your wallet, or a WAU, a weekly active user, a daily active user of your wallet. That's a pretty new switch. And so now you're kind of shifting from the wallet metaphor as a bank account to maybe the wallet metaphor as like a browser, right? Or the wallet metaphor is something that's a part of your active usage of internet products. That's pretty new in terms of having enough people equipped to actually try out these things. And I haven't seen like MetaMask's specific numbers lately, but I think we're probably order of like mid to high single digit millions of people right now, right, that have these things. And so that's not like a ton. That's not internet scale, not even close, but that's the scale where you can start to get little network effects to form within new products that need it. Whereas before we had that, you had no chance to tip liquidity on a social network because you just don't have enough users to do that. But now you're kind of at that cusp where you can start to create these consumer networks that actually have like an interesting enough scale to where they still feel obscure, as they should be. There are less than 10 million people probably that are there to use them, but it forms the seed, and it allows it to basically come into its own in a way that can then grow and catch on once the value proposition has resonated and the vibe has been figured out, and what you want out of that social network has been figured out. So that's what I think is pretty interesting on social networks specifically. And I can speak more in depth of Farcaster. That's one that we're early investors in, and I personally spend most of my time as a user on Farcaster. But I think that's the approach that many of the smart social networks, Lens included, are taking. It's really around. We know we're not going to start with everybody. Let's start with kind of people who we think are the right early adopters.
I'd be curious what at least with our experience on Lens, we get like, let's call it double, triple the likes than we would on Twitter. So they seem like a more engaged bunch. I wonder if that's the case across, like if you were to like compare the engagement of like Farcaster Lens relative to Threads. I wonder if there's more engagement because there's a bit more sense of sort of crypto camaraderie or something of that respect versus just you kind of dump something on 100 million people, or how many users does Facebook and Instagram have? Billion. It's no surprise that you're going to get tens of millions of people on it, but how are they using it? How often are they using it, et cetera, is really what's important.
Well, number one, I think that crypto, like for social networks, like for decentralized social networks that are focused on crypto, I think number one, you've found that like you've narrowed the scope of conversation just by definition of who you have in. And so you're just on resonance with a greater percentage of the user base if you're talking about crypto on Barcaster than if you're talking about crypto on any general purpose social network. So you get a benefit just by virtue of that. But I do think that there's an opportunity to really it's not just like I think social networks, frankly, I don't think they win if they continue to placate to kind of the status games of social networks today as we know it. I think the big opportunity is to figure out what are these status games of tomorrow. And maybe that involves NFTs. Maybe that involves actually using a bunch of our kind of crypto capabilities in conjunction with the network. That to me feels like the big opportunity to figure out. And what I do know is that every social network that starts, one thing that I kind of deeply held belief of mine is that you have to start relatively niche. You have to start in a way where you're not bringing a bunch of celebrities in day one, right? Fundamentally, I think the social networks that work are the ones that mint their own celebrities net new, not the ones that actually bring in a bunch of celebrities and ask them to import their fame and their audiences. Because in fact, if you do that too early, they actually overwhelm and stamp out what could be a unique character, what could be like unique attributes to the social network. You're going to overwhelm it. You need to home grow it a bit. And that means most of the time starting pretty niche, right? This is like, Facebook starting at Harvard. This is like Twitter starting focused on kind of Silicon Valley people pretty early. This is so you kind of like tightening your focus on who your early users are. And it helps if they're actually somewhat relatively obscure. I think young people by definition are relatively obscure. But at the time where Twitter was seeding that network, the people in tech, it was a relatively obscure ecosystem. It was before it became as big as it is right now in terms of the zeitgeist. But I think starting with a bunch of crypto people is actually a pretty cool place to be because it kind of fits all that characteristics. It's still pretty nichey. But I think that, like I said, I think a lot of people in crypto are on the right side of history in a big way that sets them up to be pretty interesting as kind of future famous. And I think that putting a bunch of crypto bells and whistles into the social networks product itself, like NFTs and making it blockchain aware while following, you're measuring how close you are to somebody else on the blockchain and using that to inform parts of the social graph. Those things are really interesting, and people, no other social network does anything like that yet, and so it has the makings of like that's a cool way to express aspects of yourself that are not being expressed in social products that we have today.
Yeah, that makes a lot of sense. Now, what's sort of the thinking on the gaming side?
Yeah, so one of my like. One of our beliefs about how do you think about what are interesting places to invest or look at times like these, I think that if I generalize across these cycles, I think one really good opportunity is you look back at the prior cycle and you say, what really struck a chord? Like what caught lightning in a bottle, but what maybe didn't stick its landing as well as it could have. And so what do I mean by that? I mean that, for example, in 2018, 19, if you look back and you said, wow, CryptoKitties was a phenomenon. And it basically like captured the hearts and minds of anybody that was cursorily aware of what was going on in crypto. And it was the first project that I think that brought NFTs into the limelight in a new way. But I think we also saw that the project itself had flaws that it was tough to ultimately overcome. And so the wrong way to learn from that would have been NFTs are bullshit. The right thing to learn from it would have been, oh my gosh, they struck a chord and that was incredible. And the right frame is that something, despite being flawed, was able to achieve what it achieved. And so now we have an opportunity to actually take it to the next level, learn from the past and do something different. And so I think about gaming. There's so much of a default reaction to look at these pioneers like Axie Infinity and say, didn't work, like write it off, it's done. But I think the more constructive frame is to say that despite some imperfections, this thing shattered records in the game industry. A game that's a couple years old that's doing billions in revenue was previously like unfathomable in the industry. That was insane. And so yeah, but then like it didn't stay there, right? They had to come down. I think that they themselves will acknowledge that it was an opening salvo, right? And so now there's but I think that people, if you saw that and your response is crypto gaming is bullshit because Axie went up and then went down, you're like, no, you've missed the point. The point is that it demonstrated this explosive potential, and if you can take it to the next level, then my God, like this opportunity is insane.
We did so many episodes. I interviewed a bunch of people about the topic of like in-game economies and how do you deal with like a game financial crisis and like what levers do you have in managing through that, because it's basically what happened with Axie. And I don't think I ever wrote the piece, but I wanted to do like a big deep dive on it. I think we just had a few conversations, but it's not easy. It's not, and it's a pretty difficult task to kind of manage that economy well, especially when you're dealing with like a token. And that makes it more complicated because you're sort of financializing this activity in a way that is unusual or new or novel. And I think some of the lessons that you're talking about will be, how do you navigate that when the token is under pressure from a price perspective? What levers can you pull to keep the game engaging? Is something that like I had a few conversations with people about because I thought it was fairly interesting.
Yeah, and by the way, I don't necessarily like. I think that I couldn't tell you yet what specific, if there's the crypto game that works, where is it going to use crypto specifically? How much of its elements are going to look like conventional games? How much of its elements are going to look like on-chain protocols? I think that we're still in that phase where like that's yet to be discovered. I think we have like some pretty amazing entrepreneurs. I know that we at least work with a number of terrific entrepreneurs that are kind of exploring different approaches here. But the other thing that was cool about Axie that people didn't realize is that it actually put crypto on the map in a more legitimized way for a lot of really amazing game developers themselves. I know, for example, we work with a gaming studio named Limit Break, and I can tell you that the founder there, Gabe Layden, Axie was critical as a data point to really make him double click and go deep on the space and try to understand. You see the eye-popping numbers. He said, "Oh my God, what is going on here? I need to learn." And then it was basically the bat signal that got him learning. And then someone like him that has like all the bona fides in the world as a game developer now really thinks about crypto as the next evolution in gaming as a function of kind of being introduced to the concept via Axie.
Yeah, it's like a spectacular failure can almost raise awareness about something, and then at first glance, it's okay, this is not going to work. But when you dig deeper, the sort of potential becomes a bit more apparent. How's your how have your guys' thesis adjusted or changed from previous cycles to this current one?
It hasn't really, but it's also kind of a cop out because we've never been like that thesis oriented in what we've done. I think we always we have kind of beliefs that we kind of evolve over time, but I think that we've always fundamentally been like entrepreneur chasers. And so in that, we're in this game for the love of entrepreneurship and to support founders that we think are best of breed and are going to build some of the most impactful and important projects and companies out there. And so I've always, right, like my joke is like, what's the difference between like a hedge fund investor and a VC investor? The hedge fund investor, when they're meeting with an entrepreneur, the hedge fund investor like thinks they're the smartest person in the room. And the VC knows that they're not the smartest person in the room, and the entrepreneur is the smartest person in the room. And so in that, I just try to find people that inspire me, and then hope there's enough alignment with some of the beliefs that I've built up over the years, and then I fall in love, I get seduced, and I just work my ass off to help them win.
So, people base obviously important, but has scope maybe changed? Are you looking at? Have you gotten bit by the AI bug yet?
Well, number one, I think we probably have a lot of default skepticism at most of like the AI / crypto stuff that's going on because it feels just like obvious hype chasing. I think there actually are like very profound intersections of the two down the road. In fact, I think it's kind of inevitable that AI and crypto intersect in a big way. I think you start asking questions around like how are AIs going to control resources, and are they going to have bank accounts, and how do you think about the ownership and governance?
Yes, we were talking about this 2 days ago with Lightspeed came on the show, and we were talking about how NPCs in games might actually have bank accounts and have some form of wealth in
That's
these
funny.
games. And it's such a scary, weird thought to think that there are going to be NPCs that are richer than me, richer than maybe both of us. I'm already down bad. I don't need the robot.
That's hilarious. But yeah, I think that for in terms of the thesis, it's less about like chasing things than that. But I think again, I go back to this like pattern for like, hey, where are we today, and what are these like very predictable occurrences that happen at moments in the cycle like this? And so that's kind of one heuristic that I gave earlier, which is look for what really struck a chord in a big way that didn't stick its landing, and now think about opportunities to try it again, but putting the pieces together a little bit differently and learning from the past. Another one that's evergreen is where has technology really turned an interesting corner? Because I think what bull markets do as well is they financially subsidize the R&D, a lot of things that are much more like forward looking from a raw technology standpoint. This is like Bill Janaway is the master of this stuff, about like how bubbles are productive and actually subsidizing tech R&D. And then and often like some of that stuff actually gets advanced, pronounced it gets advanced quite a bit compared to where it would have been if it was just allowed to kind of evolve naturally. And so an example is we think that what's a lot of the ZK stuff that's happening right now is some of the most interesting. Number one, because I think most outside observers or casual observers have not appreciated how important of an inflection there's been in the maturation of the underlying libraries and capabilities and speeds and efficiencies for generating CKPs, for utilizing and constructing circuits to prove all sorts of things. And so that's been a really big shift. And that's become kind of a backwards looking theme in kind of our investments over the past 6-7 months. That's a really important example of just where a raw technology inflection has really taken place. And we did not have these capabilities last cycle. And so now that feels like a really great element that could add to the tapestry of the next cycle because like literally it's net new. So that's a really big one. That's something we found. That's an example of kind of a tech led inflection.
Yeah, Vance Spencer Framework pointed out. He had this tweet a few days ago before we had all the craziness today, about how the people are still kind of sitting on the sidelines and licking their wounds, but there are these underpinning changes.
This is the best bear market of all time, almost definitionally, right? Because every time we go through a bull, we land at a higher low point than we did in the past. And every time we're in a bull, we've really the arc of progress in crypto has moved forward materially, right? In terms of yes, crypto does not have the hype and momentum that it did. But if you want to build something on crypto, on a blockchain, if you want to build a protocol, if you want to do something creative with this, look at what you have on the table to play with. You have an order of magnitude more capability than you've ever had. And so every time the arc of progress marches forward, right? We have crypto is so far beyond where it was at prior points that felt the same based on the market sentiment in terms of its actual fundamentals.
Yeah, and there's still, I mean, there's still a lot of value there. Not only, again, to your point, the lows are higher, but you have, as Vance pointed out, there's 3 DeFi apps tracking 100 million of ARR this year, in a bear. There's still money at play. I think Tether, as an example, hit all-time high in its supply during the bear. So there are signs and glimmers of robustness that didn't exist or wouldn't have existed.
It reveals how fundamentally powerful a decentralized protocol is from a fundamentals basis, right? I think that I think it was Ben Graham that talked about when something is down and it should be much further down, but it actually doesn't go as far down as you think. It reveals an insane strength fundamentally behind it. Similarly, when things when they resist going up as high as you think they should go up, it reveals kind of the opposite. But again, it's I think many people lose the plot. I've said a bunch of times that I think, for example, a DeFi protocol, it is just on a fundamental economic basis. Basically, it's an economic engine unlike any other that we've produced. If you think about it, right? I call DeFi protocols, or kind of blockchain protocols, the platonic ideal of venture capital investment, because if you think about what makes for the best venture investments ever, there needs to be pretty low capital requirements, right? You need, ideally you want to get somewhere with a couple $1,000,000. You want a bunch of, you want strong forms of defensibility, and protocols have a bunch of network effects within the protocol, or even with the protocol being used otherwise. So you get the best form of defensibility that we have in kind of the modern business era, which are network effects and kind of platform effects. That's number 2. And then number 3, you want a lot of operating leverage on the business, right? That's in terms of margins. And if you think about the revenue profile of a DeFi protocol, it is insane compared to anything, because of you get to run it on a public blockchain. And so you get to basically amortize your cost of infrastructure. You get to share it with everyone else, and your users basically pay transaction fees to operate your infrastructure. So when a DeFi protocol generates revenue, it's not revenue like a software company generating revenue. It's 99% margin revenue. It's free cash flow that it's generating. And just that as if you that's why when people put some of these DeFi protocols and they stack them up with software companies, they have no OpEx, right? You ship the protocol once it's there, and then the operating expenditures are borne by the users. And the blockchain covers you. You don't have to pay your server bills. You don't have to hire. It's just and so the economic properties of these protocols, they're the best businesses that have ever been constructed. And so that's where it's not surprising to me that the ones that have actually stuck their landings are just putting up these Herculean numbers, even when everything in the world tells you they should be failing.
Yeah, that's a really good point. I think whatever the margin ARR is, it's fairly maybe 90 some odd percent or something like that. Okay, so thinking about the next 6 months, maybe a year, what are you excited about? What maybe are you thinking will pan out or transpire?
So, well, basically, like we've touched on a lot of these topics, but I'll recap. I think that social networks are at a place where they're starting to be really fun. And I think that they're just really, they're fun, they're unique. The experiences look and feel different than your current social network. So I encourage you to try one if you're inclined and just hang out. Don't expect it to be 100 million users tomorrow, but I think that expect it to feel a little bit different and expect it to feel edgy and expect it to feel like maybe this could be the cusp of kind of the next era status game. I think gaming, I think that now is the time where, right, Gabe laid in the entrepreneur referred to earlier. I think his kind of, in prior gaming years, I think kind of the magic number is something like, it's either like somewhere between 1,000 and 10,000 games need to launch on a new platform before you actually start to really generate games that work. That's kind of the scale of experimentation that you need in order for viability to be established in an ecosystem. And so we're not there yet, but I think we will be soon. And so I think that a bunch of games are being worked on right now, and they're set to launch. We've got a couple in the portfolio should launch in the second half of this year. So I think we're going to get to the point where there's actually enough games around that some are actually going to be great and some are going to be fun. And it's going to catch people by surprise. But now, like kind of now's the time, right? It couldn't have happened earlier. So I think we're really excited to see how that manifests. That's topic number two. The ZK I alluded to already, right? Which is, I think that this is really a profound, I can't express how profound of an advancement this stuff is. And I think that it fits into the mega theme of like what happens off chain is usually bad, right? All the bad stuff that happens in crypto is shit that happens off chain. And when you're on chain, you're at least like within the warm blanket of trust. And I think that ZK basically allows you to do a bunch of things off chain in a way that's much more trustworthy, which I think is a really important breakthrough because it's going to shore up weaknesses that like fraudsters and scammers have been able to exploit in the past. And we're going to basically like fortify the boundary, and this stuff is going to play a key role. So very excited about that. And then the last one I'll put as a topic that I've been enamored by, and I realize I'm some degree on a limb with it. And I love what's happening with Bitcoin ordinals. I think there's a potential Bitcoin renaissance underway. And as an old school Bitcoiner, Bitcoin is my first love. I remember when Bitcoin was a really dynamic ecosystem for developers and builders and tech enthusiasts. And it hasn't been, right? A lot of that energy went elsewhere. But I feel like Bitcoin is recapturing some of that. And a lot of people that are newer to the space are sleeping on the Orange King. They don't realize how much of a sleeping giant this could potentially be, in my opinion.
Well, we shall see. If Bitcoin becomes revitalized and has that renaissance, I mean, the price is good, but yeah, there's definitely, yeah, it's not really like, it's like I don't write about Bitcoin and what's happening around it so much as maybe the philosophy or the promise of it, and that might change with sort of ordinals and others. It's funny because speaking of which, we had like 3 Bitcoin shows in a row a few weeks ago with all the stuff happening around ordinals, and I mean that's kind of evidence of that shift. But it was funny because we didn't. Sometimes we like notice we're booking a lot of shows or people at the same time to talk about similar things, and we're like, "Whoa, wait a second! There's an actual." It's not on purpose. It's like we notice in the process of doing it. It's like, okay, this is becoming like a trend. Something's different here. But anyway, we'll leave it there. Thanks so much for coming on the show. Hopefully, we'll see you again soon.
Amazing. Thanks, Frank.